right, I will get us kicked off. We still have a few more people joining, but I'm sure they will catch up with us quickly here. If you haven't already, please feel free to tell us a little bit about yourself and your business in the chat, and make sure that we're covering anything that you might have questions about today. Feel free to go ahead and ask. We are going to have Q&A at the end of today's session, so if you do have any questions about anything we've covered, we will definitely get to answering them. So please stick around for that Q&A if you have any questions. Uh, let's dive right in. Thank you for joining us. My name is Dan Reed with SCORE Maine. If you're not familiar with SCORE, we are a nonprofit that provides free one-on-one small business mentoring where folks who have been in the field for a while, or they had their own small business and they're looking to give back their time, they meet with small business owners and provide them with that perspective and someone to bounce ideas off of. And we also provide anywhere between 8 to 10 small business workshops every month, just like this one. So if you are interested in getting a mentor, or you're interested in learning a little bit more about topics or the business of doing business, feel free to reach out to SCORE. And thank you for joining us today. We are going to be talking about keeping your business and personal expenses separate and the basics of bookkeeping. I do want to thank the Maine Technology Institute, who is a blanket sponsor of SCORE workshops and who provides us with funding so that we can provide these workshops for free to anyone who wants. So thank you very much. And with that, I want to hand it over to Jessica, who is going to introduce herself, tell us a little bit about her business, and talk to us about bookkeeping today.
Hi, everyone. My name is Jessie Valicini, and I am a small business bookkeeper. I have been in business for almost 3 years now, and I'm super excited for the opportunity to talk about business and personal expenses, keeping them separate, why we do it, and how. Let's see. All right. So for outline today, we're going to go over a quick introduction of me and myself. I have a couple pictures, or a picture on the next slide. We're going to talk about why you want to keep them separate, what business versus personal expenses are, how to actually do that. We'll go over a short exercise, and then we'll talk about common mistakes that are made as well. And then we'll do a conclusion and open it up for some questions. So, who am I? I am Jessie Valicini. I am a small business bookkeeper. I work with lots of different types of businesses, anything from service-based to inventory, like merchant type-based businesses. I have a lot of fun with my clients. Although accounting can be boring for a lot of people, you can make it fun and super useful in your business because that's how we make decisions. Milani is my black lab. She is 9 years old. I love helping business owners stay organized and understand their financials. So why do we keep records? Good records will help you monitor the progress of your business, prepare your financial statements, identify sources of income, keep track of deductible expenses, which is what most people want to know about, and keep track of your basis and property, prepare your tax returns, and support items reported on your tax returns. One of the things that's really important is to make sure that you actually have records of all of the ins and outs of your business, whether that's receipts, that's invoices, that's like checks and like anything that actually has information as to what's happening in your business is super, super important. As well as things like bank statements and credit card statements are useful records as well. So why actually keep business and personal expenses separate? It's really for your legal protection. If you're an LLC or a corporation, you have something called the quote corporate veil. When we pierce that corporate veil by mixing your personal and your business expenses, we open our personal assets open to potential harm, or basically being able to, when you do start to mix your personal and business expenses, you open up some of your personal assets if someone was to ever like go after you or sue your business. So we want to keep those things very separate. So if something does happen, God forbid, that it stays very separate. Your business, something that happens in your business, they can't go after your home, things like that. We want to make sure that we have very simplified bookkeeping and tax prep. And I say simplified, it's really, we were talking beforehand, it's those habits, that consistency, so that you make sure that you have everything that goes in the right buckets, which then come tax time, this time of year, you're actually ready to send all those reports to your tax accountant so that they can prep everything for you. The other one is to maximize deductions. When we start mixing business and personal information, we sometimes put business expenses on your personal credit card, but then you don't remember which ones were business expenses and which ones were personal. If you are to get audited by the IRS and you have a personal card, let's say on your books, they're going to say, what is this? Why was it a business expense? And they're going to really dig into those questions. So we want to make sure that as we keep them separate, we keep all the information, but it allows us to maximize those deductions long term. The other thing is very clear cash flow management. When we are an LLC and we do not pay ourselves in payroll, we are now taking deductions from your business. When you pay for personal things on your business cards, oftentimes you can kind of disrupt your cash flow management for your actual business because you're using it to pay for personal things. So if we keep those things very clear and you pay yourself on a habit basis, whether that's monthly, and even if it is just a deduction to pay yourself, it's very clear instead of, let's say, pay for groceries on your business credit card, or if you pay for gas on your personal credit card and it wasn't supposed to be, or your business credit card and it was supposed to be personal. The other thing is audit defense. Um, I used to have a mentor that would say, it's not about if you get audited, it's when you get audited. And so when you have all your ducks in a row, you're reconciled on a regular basis, you have all of your supporting documents, it's audit defense. It's when the IRS comes knocking at your door, you can clearly explain what's what, and you're like, here's everything. Here, open my books. Um, and there's not a lot that they can come back on you for if you have all that information. So we want to make sure we have a very clear line in the sand and audit defense here as well. And I know that that's easier said than done at times. I totally get that. So what actually are business expenses? There's they're in some gray area. I'll say that out loud. Um, but there are rules. One of them is it's a cost to a business that incurs to operate said business, but it must be ordinary and necessary. So this is directly from the IRS website. They do not give you a list of business expenses that are okay to take and what's not okay to take as deductions. They do, however, have to be ordinary and necessary. A very good example of this is if I am a gym owner and I buy a treadmill, that's going to be a business expense. For this case, it'll be a business expense. If it's above a certain amount, we could asset and depreciate it. But for this instance, we're just going to say it's a business expense. However, if I own a grocery store and I buy a treadmill, the likelihood of being able to put that as a business expense is not as high. It's not necessary or ordinary for my business. So you have to think of what you are doing in your business, what's either service you're providing, what like potentially merchandise or whatever. What is it that you're actually providing to the public, and is it ordinary and necessary for your business? Great examples of business expenses include utilities, rent, legal and professional fees. I'm going to back up to utilities and rent. Since COVID, we've gotten a lot of questions on, can I take my home office as a deduction? The answer is absolutely. And it has to be, there's different ways to do it. Utilities and rent should be for your business space. If you do have an office space at home and it's used only for business purposes, there are ways to utilize that as a business expense as well. Any employee pay, whether that is 1099 pay or W-2 pay. 1099 pay does have to come with a W-9. You have to make sure that, and then you file the 1099s at the end of the year, January 31st. in order to actually take those as business expenses. If you do not 1099 a contract employee, that is not a business expense. Let's see. The next one is like any advertising fees, whether that's networking fees, um, Facebook, like social media fees, whether that's paying an agency, anything like that belongs in advertising. You also have bank fees, auto expenses. You can take mileage if you don't take auto expenses and your business doesn't own your vehicle. Mileage is a really, really great one for those that drive a lot. It really can help drive down your total tax liability as well. So, how do we actually keep those business and personal expenses separate? The first things first is opening a business bank account. For new businesses, sometimes you don't quite have your EIN number, which is necessary in order to open a business bank account. What I recommend if you don't have an EIN number yet, because you can operate as a sole proprietor without starting an LLC and getting an EIN, is to have a separate bank account anyway. So even if it's technically a personal account, having all of your business transactions run through one bank account that you do not have personal expenses run through. So that's the first thing that's super easy to do is open a separate business bank account. The next one is to actually pay yourself an owner's draw. So this is what we were talking about previously is sometimes again we don't necessarily pay ourselves if you're a sole proprietor and you don't pay yourself a regular salary, you take draws on your business. And sometimes those draws are the grocery store or gas or a gym membership. So instead of using those business funds, actually give yourself an owner's draw. The best thing I recommend for people is to set up an automatic payment to yourself like you would if you were running yourself through payroll. Now, if you're running yourself through payroll, that's awesome. You're going to have either like weekly, bi-weekly, or monthly payments to yourself. If you do not have a payroll, then whether you're moving money, once every 2 weeks or once a week, having an automatic transfer into your personal account just to make sure that you have money for you. And then it's very separate. This is the money that I took out of my business. And then these are all my business expenses. So it is very separate. Use financial tools. Um, I know QuickBooks is taking over the market. Some people love it and some people don't. But I highly, highly recommend using some sort of software that'll help you keep track of these things, that will help you run reports on a regular basis. For those that are really small, that are sole proprietors, something like Wave is really, really great, very helpful. There's QuickBooks, there's Quicken, there's FreshBooks, there's a whole bunch of options out there. Find one that works for you and that you're going to use consistently. And I would highly, highly recommend some sort of financial tool to support you. Avoid cash transactions if possible, whether that's both, well, mostly taking cash out of your business and then um, paying somebody in cash. Unless you get a very clear source document that says this is what you paid for, this is the amount of cash that, or this is the cost of it, and the cash associated. Sometimes cash transactions, taking that money out of the bank account, can be very difficult. The other thing is when you get paid in cash, sometimes it doesn't always make it to your bank account, and we end up paying for other expenses with that cash. So I personally think that it's best to try to avoid those cash transactions if you are not great at keeping source documents in line, because the business or the bank account is going to be our backup for any transactions. It usually gives us a piece of information if we forget that we've, ran your card somewhere. It gives us a piece of information as to what you bought, when you bought it, and it gives you date, time, etc. Check out the chat here. What do you mean by source document? Great question. So um, a source document is going to be, usually it's got specific pieces of information on it. It is who you paid or who paid you, what the date was as to who you paid and who paid you, what the transaction was or was for. So oftentimes this is an invoice, a receipt, a purchase order, some sort of contract stating that money was moved in between two people. Does that make sense? I hope. But it has like if you look at it, yeah, perfect. Okay. I just want a little feedback to make sure that makes sense. So yeah, usually invoice, receipt, something like that. So always get the source document. If you are even just going to get a cup of coffee somewhere with somebody, usually a client, oftentimes you get that like, no, I don't want a receipt. Try to click, yes, I want the receipt. In QuickBooks, you can actually take a picture of the receipt and it creates an expense for you. Then you can match it to your bank account. It's like super easy. So even if you don't hold on to that paper receipt, if you get a digital copy of it and keep them organized, it's like very, very helpful. Whoop, there we go. Da, da, da. I think I went too far forward. Which way are we going? Okay, there we are. Okay. All right. So what we're gonna do now is in the chat. So this is like just a little game. Um, in the chat, comment one for business expense and two for personal expense. And there may be one or two on purpose to trip you up a little bit. So for the first one, office rent. Is this a business or is it a personal expense rent for your office? One. Yeah, great. Yes, this would be a business expense. It is an entire business expense. Again, like I said previously, if you do have an at-home office and you have a square footage, if you pay rent to like if you're renting like to a landlord, you take the percentage of square footage for your entire space, and then you get to take that as a deduction from your rent as well, which is pretty cool. But it has to be an entire space that is just for your business. It's a little bit more complicated when you own the home, but it is possible to take a deduction from that as well. All right, next one is on the way to the office, you're going to get coffee. Is that a business or is it a personal expense? Ooh, yes, awesome. So this is a personal expense. When you go to get coffee with somebody or when you're for meals and expenses or meals and entertainment, you have to be with either a client, a vendor, networking meeting. You're doing business with the individual in front of you and you are getting food and or coffee together. If you choose to just go to get lunch on a Tuesday by yourself, that's not necessarily a business expense. All right, electricity bill. One, one. Yes. So percentage of square footage. Yes, very nice. So if, yes, your electricity bill, if it's for if you have a commercial real estate space and your CMP bill is going to be 100% a business deduction, business expense. If it's your home, yes, you can take a percentage of the square footage. There are two different ways in order to take for your deductions for your home, and one of them is a set amount per square footage, but the for most people, it's actually better to do the math and do the percentages. So yes, the electricity bill, both for at home and for your business, you can take as business expenses. Yes, that would also be a business expense. Yep. So if you had a rental property and you paid the electric for your tenant, is that a business expense? Technically, yes, you're still paying the bill for your business. Hopefully that's included in their total rent, so you're not the one that has to foot the bill for it. Um, but if that's the case, if it's a rental property, then yes, that would be an expense at the rental property. Okay. Common mistakes to avoid that I see is using one card for everything. So using one card for everything. So if you have a credit card and you only have one credit card and you use it for your entire life plus all of your business expenses, that gets very, very messy. I've worked at a couple different places where business owners do that. And as bookkeepers, we have to operate in the conservative area, which means if I see something and I don't know if it's a business or a personal expense, I'll ask the individual. But if they don't know either, then we have to put it as a personal expense. So we do operate conservatively when it comes to business or personal expense. Um, Borrowing from business accounts, same thing. If you're in a rut, you forgot your, you know, or you forgot your personal card at home and you go, oh, the only one I have is my business one. And all day you run personal things through your business accounts, that can get really sketchy. Jim, can you explain a little bit more of your question? I'm going to hold that one till the end so I can read it and conceptualize a little bit more. So hold that one till the end. Number three is neglecting record keeping. So a lot of business owners are really busy running their business. Oftentimes, you do a lot of the work in your business, whether that's marketing, that's fulfillment, that's training the employees. And record keeping is one of those things where it gets pushed off to the last minute. There are a lot of people that I see that December 31st rolls around and they say, oh my gosh, I haven't done my bookkeeping for 8 months. So, one of the ways I recommend keeping up with your record keeping is one, it's utilized something, whether that's QuickBooks, whether that's Quicken, something like that. It's also setting time. I like to call them like basically admin days, where you do 2 to 3 hours, um, depending on the size of your business, whether that's a week or a month, and do all of your record keeping or all of your admin work in that time that is associated with your bookkeeping. If questions come up during that time, it would have happened either in the last week or the last month. So you know what you're talking, like what actually happened in your business. If we go, if it was 8 months ago, sometimes it's really hard to remember what had happened, who got paid what money, where that deposit came from, etc. So making sure that you are keeping up on it, I always like to set aside a time where it's like put it in your calendar, time block 2 hours, and say this is when I'm going to do my bookkeeping, and then keep track of it. Make sure that you do it and show up. Even if it's not super fun, it will decrease the amount of stress that you have at the end of the year come tax time, I promise. So set up a time in your calendar, whether it's weekly, whether it's monthly, and make sure that you input all of your transactions, your expenses, your income, and reconcile your accounts is a huge one that people look for, is to make sure that your bank balance actually matches what's coming in and out of your bank accounts in your record keeping, whether that's your QuickBooks or something else. Some people use spreadsheets. That's fine too, but as long as you make sure that that's reconciled. Stay away from Venmo, PayPal, Amazon without source documents. Um, these things show up on your bank statements as that. They show up as Venmo, PayPal, Amazon. And it doesn't give us the information of who did you pay? Why did you pay the person? What date was it? Where did it go, etc. And so it can be very hard for record keeping. Um, for Amazon, for example, you can get things from like clothing, which would be a personal expense, to all of your office supplies. So just being very clear. If you do get audited and the IRS sees something like Amazon, they're going to dive in there. They're going to question, what's going on and why. Same thing with Venmo. They don't know who you paid. You could have paid the babysitter. So they want to know who you paid, why you paid them. um, the total amount, the date, etc., so that it's very clear. So if you are using those things, make sure you have all the source document for them. And then ATM withdrawals, like I said before, this is like things like your cash accounts or cash transactions is unless you're going to keep source document, it's totally fine if you do. Making sure that those ATM withdrawals aren't just random withdrawals, they will end up in an owner's draw. Um, More than likely if you do not have a source document. So making sure to avoid some of these mistakes. All right. What questions popped up for people as we went through this? Um, Jim, I know you had a question. So you know you can deduct business miles on your Prius, 70% of your gas miles, buy gas on business credit card and reimburse, or what? So for business miles, this is a very interesting one that I see all the time. Business miles are used to support the maintenance of your vehicle, um, and the cost of the car to you that you use for the business. So for business miles, you get back 70 cents per mile on each mile. So let's say you had 1,000 miles, you'd get back $700. You could deduct from your expenses $700. Um, and you cannot then buy your gas on your business credit card. So it's supposed to be if you take miles, you can't take gas, you can't do maintenance, you can't do registration on your car. If your business owns your car, then you can do your gas, your maintenance, your insurance on the car itself. So the reimbursement is to support all those things. The things that are not included in that for mileage and for taking your car as a full expense if the business owns it. And even still, your tax accountant is probably going to put a certain percentage of personal use on there anyway. Um, Things like parking and tolls are still going to be a business expense if you're driving for business purposes outside of miles and or if you do miles or if you do the like if your business owns it and pays for all of the things. I hope that made sense and was helpful.
It
But you
it
can.
it sort of did. There was a lot, and maybe I can review and focus. So I do DoorDash as sometimes supplementary income, sometimes my main income. I do have business and personal accounts that I'm ignoring, and it's all personal, but it's going to change after this workshop.
Awesome. I love
So,
that.
so should I pay for gas with my business account? The car is shared use. And I think I heard the answer no, use my personal account, but when I do my taxes, I would take the deduction. Did I hear correctly?
Yes. So I would say use your personal account for your gas and then keep track of the miles that you pay for or the miles that you drive for your business. And then the miles, then you can reimburse yourself 70 cents per mile. Does that make sense?
Yes. And the mileage apps that I pay $10 a month for, that comes out of my business account, I bet.
Perfect.
Good.
Yep.
Awesome.
Yeah.
Okay. Thanks.
Yes, and I was going to recommend there's some really great mileage apps, and it sounds like you're using one. So that's kudos to you. That's great. All right. Barbara, how do I set up owner's draws with inconsistent fluctuating income as a consultant? This is a really, really great question. Um, how's the best way that I want to answer this? It's so I'm going to give two answers potentially for this one. And hopefully one of them works well for you. So, if you're keeping track of your income and your expenses, at the end of every month, you should be able to reconcile your accounts and create a profit and loss statement. If you're able to create a profit and loss statement, it will show you how much income that you've made minus all your business expenses. And using that number, then I'd pick an amount that you want to pay yourself. You have to look at both what you have in your cash accounts as well, and what that net income says. But I do a once a month potentially transfer based off of what you made. And for most individuals, I recommend keeping between 30 and 40% in a savings account for taxes. For self-employed individual or consultant, you are required to pay self-employment tax, which is a little bit higher than if you had a W-2. Well, you just get to pay the whole thing because you're your own employer. So making sure, yeah, you know. So that's the number that I would look at is whatever that net income is and having and taking that minus 30%, 30 to 40%. The other thing is picking something that's small enough that you know that you're gonna make more than that. So if you want to do a biweekly transfer, let's say like you know you can commit to $500 biweekly, then great, do that. If it's 5,000 and that feels good for you, awesome, do that. So something that you know that you're going to have in your account that you can pay yourself. I hope one of those words helpful. Okay, cool. Are there any other questions? I can stop sharing my screen as well.
I did see one other question in the chat. Honestly not sure if you may have covered it as we were going there, but if you had a rental property and you paid the electricity for the tenant, is it a business expense?
Yes, the answer to that was yes. So that
Okay.
is something that you can take. It is your rental property. So, for example, same thing if you didn't have tenants in there. If you didn't have tenants, you're not necessarily making any income at that time, but you still have expenses to the property. So, yes. And then hopefully, then my second response to that was hopefully you have it factored into your rental agreement if you can. I know Portland's a little weird, but I actually have not heard of Tax Act before or used it. So I don't have an opinion on it because I don't know too much about it. I apologize. Yes, you can. Um, as long as it's considered a rental, like an investment property, you should be able to still deduct it even without tenants during that time. And your tax accountant, I will put a little asterisk next to my name. I am not a tax accountant. I focus mostly on bookkeeping and making sure you stay organized. So I will asterisk there for any people that are looking for tax support. Um, it is seeking somebody that's either a CPA or an enrolled agent is very helpful. Um, let's see. But if you are an investment account, it's a different, there's a separate tax, what do I want to call it? Sheet that you put your investment property on. And you should be able to still deduct your utility bills from that because it's an investment property.
All right. Thank you so much for presenting to us today, Jesse. And I'm going to put your email in the follow-up email. So if anyone has any questions, they can reach out. I'll also include a recording of today's workshop and the slide deck as well. And if you have any questions, please feel free to reach out either to myself or to Jesse. And I hope everyone has a great weekend. Happy Friday.
Yes, happy Friday. Thank you so much.
Bye, everyone.